Yes, the first half has been better than expected, some would say, courtesy the huge rally that this market saw starting from April. How will the second half be? Well, we polled 30 fund managers, and here are the findings. They're pretty interesting. First things first, the headline is that almost 77% of the fund managers say the market is heading higher in H2 2023. So the next question is, then where will the Nifty be by the end of the calendar year? Now, here things are interesting. The majority, that is almost 42%, feel that the Nifty would be between 20,000 to 21,000. The next biggest group, that's just about 21% of the respondents, they feel that the Nifty would be around 19,000 to 20,000. Interestingly, not too many fund managers right now are predicting a blowout rally. As you can see, that very small minority here, just about 10%, feel that the Nifty can cross 21,000 as well. So it's tempered enthusiasm, you could say. Let's move to the next question. Which sector will lead this up move in the second half? Here, the consensus and the majority is really going with financials and banks. That sector is right on top, 63% over there. Autos have had a great rally. The auto sector, remember, is up 22% in the first half of this year. Still, fund managers feel we'll probably get more. Pharma can also be contributing. Interestingly, IT is a big debate on the fundamentals, right? We're expecting a very subdued, weak first quarter. Despite that, fund managers feel that the IT sector can be a meaningful contributor. Just to note, the reason the percentages aren't adding up to a perfect 100 over here is that this was a multiple choice question where you could pick more than one sector. So there you have it, the sectoral spread. Let's move to the next question now. Where will the bank Nifty be? Since the consensus is that banks will take the market higher, the bank Nifty consensus, that's about 40% of the respondents, say that the bank Nifty could be between 45% to all the way to 47%, 500. Actually, 21% of the fund managers see it heading even higher, above 47,500. That would imply an upside of about 5% from where the bank Nifty is right now. Almost no fund manager is expecting any meaningful correction in the bank Nifty. Look at that number. Only 3.6% feel the bank Nifty can fall below 40,000, which would be a 10% correction. Okay, let's move on. What would be the outperforming segment in terms of market capitalization between mid-cap stocks, large cap and small cap? This is a very interesting split because it seems the fund managers are saying that money is going to be made either in large caps or in small caps, not so much in mid caps. Look at that. 48% feel that large cap will outperform. 42% feel that small caps will outperform. Not too many are going with mid caps, at least as of now. Let's move to the next question. So which segment will lead inflows into the market in the second half? Here the consensus is that the money taps will flow both from domestic institutions as well as from foreign institutions who have been pumping in massive liquidity. FPIs have pumped in a huge amount of money, 45,000, 47,000 crores on a month-on-month basis between May and June. Okay, let's move on to the next question. Heightened IPO activity. Consensus overwhelming is almost 70% is that yes, we will see more IPO activity, so more buzz in the primary markets. Well, we threw in some macro questions as well, so let's start with GDP projections. The question is, where will the FY24 GDP be? Here, the broad consensus, or the big one, is 6.25%. That's where most of the fund managers are congregating. But a large majority also expects that, we could be around the 6% handle. So largely speaking, between these two segments, the bulk of them view that our GDP growth for this year is going to be between 6 and 6.25%. The outlier scenario is not the mainstream scenario. Not too many people expect it to fall to below 6. Neither are too many people saying that GDP growth will run away above 6.25%. Let's come to rate hikes then. So what is the expectation with respect to the central bank? The large majority says no change. Almost 48% say that there will be no change in rates. 25 basis points rate cut is expected. It's not like it's off the table because almost 38% feel we may actually get a 25 bips, cut. Hikes, well, not too many people are bothered about hikes, at least in India as of now. That's the consensus. Let's move to the 10th question. Are we going to see a lot of block deal action, which has been the hallmark of the month of June? And here the overwhelming response is yes. Expect more block deals where perhaps promoters take some profits, sell some stake, or maybe even early stage investors, a lot of the private equity guys, the kind of buzz that we've seen in June, that is expected to continue in the second half. Lastly, what is the biggest risk to this market? Because the consensus is that we're heading higher. What's the biggest risk to that consensus theory? It is actually global and not so much local. So the US recession or a global slowdown, along with geopolitics, is the biggest risk according to the managers in our survey. The 2024 local election, the general election outcome, interestingly, is also a factor for fund managers because 20% of them do see elections as a risk. Tighter monetary policy isn't seen as much a big threat, at least here in India. And interestingly enough, the street isn't very worried about the El Nino impact despite lower than expected rains in the month of June. So there you have it. The consensus seems to be that we are heading higher.